What's going on, guys? It's Gan and Mo, and welcome back to the 2020 presidential tax debate.
So clearly, President Trump and Vice President Biden, as they make their run towards the White House, have very different tax policies in mind. And the question now remains, how will those tax policies affect your investments and your retirement portfolios? So let's dive into this one.
Well, for starters, Vice President Biden has proposed to increase capital tax rate gains to 39.6% for anybody making over $1 million. That tax rate is the top tax rate he has proposed for ordinary income. Currently, capital gains tax rates sit at 20%, and alongside that contain an additional 3.8% for net investment income tax.
While Trump has said he is looking very seriously into a capital gain tax cut, another potential move his administration said is indexing the basis for capital gains. This adjusts the gains for inflation, so the taxpayer is only paying taxes on the appreciated value, and not prices that bulge because of big picture economic forces.
Currently, President Trump hasn't seemed to shed any light on his second-term tax proposal for retirement savings. However, during his first term as president and during his first year, President Trump did enact the Secure Act, which allowed more employers to provide annuities for their employees' 401k investment options.
The law also pushes the required minimum distribution age from 70.5 to 72 and gives tax credit to businesses that automatically enroll their workers into their retirement plans. Meanwhile, Biden is calling for a 26% refundable tax credit that applies to each dollar contributed to an IRA or a 401k. The tax credit will be deposited directly into the taxpayer's retirement account as a matching contribution.
Under current law, 401k contributions come right off the top of a person's taxable income, therefore providing greater tax benefit to those taxed at a higher rate, such as high-income earners. As such, Biden's flat credit would provide larger benefits to those who are on the lower income earning side and reduce the benefits to those who are high income earners.
We are not politicians. However, we are proud American citizens and part of the American workforce. We both are voting this November, and we encourage all our viewers to do the same. Your vote shouldn't be influenced by money and finances alone, but instead by a set of core values.
Whatever the case may be, you should be supporting the candidate who shares the same core values as yourself, especially during such a crazy election time. But nonetheless, we hope you enjoyed this video, and as always, don't forget to gingerly tap that like button, and we'll see you next time.